Yo, what is going on, guys? Welcome into today's video. Today, I've got a banger for you guys here. Today is going to be the only draw on liquidity guide you need. I have not posted a video about draw on liquidity before, or maybe I have, but it's been probably a year. This is going to be the most important video you watch other than understanding what a GS gap is or the rest of my strategy, but this is so important. This dictates how you trade every single day. I do not use daily bias. All of you guys use daily bias and you're unprofitable. Daily bias is meaningless if you have draw on liquidity, okay? So in this video, I'm going to be teaching you everything. Also, I'm going to let you guys know I have a completely free 10-hour long course, okay? It is the first link in the description. It goes over this. It goes over every concept I use, my psychology, risk management, my complete strategy for completely free. All you got to do is click the first link in the description. Just thought I'd throw that out there to help you guys. Now, without further ado, let's go ahead and get into the video. Bet. All right, so for the first thing you have to understand, what is draw on liquidity? Simply, it's the target or objective of where you think that the market will end up reaching or drawing to by a certain given time, which is going to be, in our case, the day or within the hour, okay? So draw on liquidity is simply just an area on the chart you think that the market will draw to. It sounds pretty simple because it is. But what's important to know is that not all draw on liquidities are weighted at the same level, okay? Some are more important than others, so we're about to go over that. Right, here's a classic example of what an AMD setup looks like. This is what happens in the market every single day. We have our accumulation, we have our manipulation, and then we have our distribution. Now, there are multiple things that you can take away from this that you might not have been thinking about before. First of all, being manipulation will always draw to a draw on liquidity. So a lot of people think you have to wait for manipulation to catch distribution, but you can always trade into the manipulation. You can trade the manipulation leg, but nobody talks about that. And this works the same way as trading into distribution, because at the end of the day, there's something that remains the same. That's the constant, which is there is always a draw on liquidity, because whenever the market distributes, where's it going? To the next draw on liquidity. So there's two opportunities. You have trading manipulation, and you also have trading the distribution. Now, we don't really have to think too much about AMD right now. The main thing we want to think about is we just want to be targeting liquidity. We don't want to be guessing where the market's going. We want to wait to see where the market's already going and then find the target, find out where it's going to end. But what makes this so powerful is that this is different than trading usually like reversal type strategies, because we don't care. We're not trying to react, oh, you know, this level is going to reverse the market. This level is going to reverse the market. We don't care about that. We're simply thinking the market will most likely reach this level. We don't have to know if that level is going to reverse or not. We just have to know, will it hit this level? So that's what makes us so overpowered. So let's go to some actual chart examples here. Right here is just a random place on the chart for NQ. This is a 15-minute time frame. And the first thing I can observe here is just obvious highs and lows. Right here, we have all these stacked relative equal highs. And when we look here, we can also see it looks like a new week opening gap right here as well. What we can look at is simply the fact that the market is going higher. And look, all these, candles going higher, we have opportunities. All these opportunities to target just this level right here. We're already going higher. And the first important part about understanding draw on liquidity, write this down, is that you have to establish where the market's already going. You're not guessing, but we can sit here and look that we're going higher. Overall, we're going higher. Well, where are we going higher to? Most likely the stacked highs, which are going to hold a lot of liquidity. Now, what's important is that if you're a reversal trader, this probably would have cooked you, because you would have thought, okay, I'm just going to limit order the highs here and I'm going to sell. It would have absolutely cooked your, it would have hit your stop. But what's important about this is that simply we're just looking, all right, the market's already going higher. We might catch resistance at these highs, but because it's such an important draw on liquidity level, we're going to mark it out and make that our target. So no matter what, even if this level reverses or not, we'll still make money. So right here, you can see we go and we end up going a little bit higher. Where do we go? I'm not sure. It looks like maybe to this high up here. There's probably a fair value gap or a GS gap up there. But that's the first thing we have to understand. We want to establish where the market's already going by looking at where it's going. We're not predicting. Just look, are we going higher? Okay, where can we expect resistance? TP your resistance, okay? Now let's go into some actual more examples and breaking down which levels are stronger than others. I just had to kind of break that down just so you know this is a style we're going to be trading. Right here I made a draw on liquidity cheat sheet. Literally screenshot this. Pull this up before every single trade you take. Listen, right here we have previous day high and previous day low. This is an insanely high chance of getting hit. This is one of the oldest pools of liquidity, bro. Unks were trading this back in the 70s. Previous day high, previous day low. Crazy good levels. Now we have session highs, session lows. These have a high chance as well, but here's what's important to note. London session is going to have a higher probability chance of getting hit than Asia, simply because it's more recent to New York, okay? But sometimes you'll go into the market at market open and London session's highs and lows have already been taken out. In that case, go for Asia, but London's going to be the best one for these session highs and lows. So those are high chance. Now, these are my favorite. Untapped, meaning never have been traded inside of. Okay, not unfilled. I've said unfilled before. I meant to say untapped, but untapped 1 hour, 4 hour, and 1 day fair value gaps. And you're going to be targeting the closest side. So for example, right here, let's say we're going to draw out, it's hidden by my webcam. I'll just go over here. Let's say right here we have a fair value gap. And let's say the fair value gap is right here. When you're looking to target draw on liquidity, you're going to look to short to the top of a bullish gap. Okay, then you're going to do the opposite for bearish. Okay, so you're going to find the closest liquidity zone. My indicator marks all this out, by the way. Everything I'm talking about is marked out by the indicator automatically if you guys are interested in that. But this right here, you're going to be doing the closest side only. Okay, because you don't want to be targeting the midpoint, because the thing is, it has all of this resistance right at the top. The reason why is because if we're going to get all order flow and corny with it, it's a low volume node. All right, there's a lack of volume in this zone and it's spiking right at this part. You want to make sure you target the part with no volume, because inside of it, there might have been some volume. Okay, you want to make sure you're targeting the lowest volume part, which is going to be the closest side. Don't mess that up. I see people do that all the time. Please do not mess that up. Okay, now lastly, we have key opens. This is going to be 18 o'clock open. This is going to be military time, Eastern Standard Time, or 24-hour time, whatever you want to call it. Then midnight, and then 10 a.m. Okay, very important key levels. But the thing is, I like to use these more for manipulation and not targets. Okay, these still have a good chance of getting hit. But the thing is, it's kind of iffy because you want to see a visual representation on the chart of liquidity, which you'll find with all of these. Basically, prioritize all of these three and then put this last, but it is still important and it's better for manipulation zones opposed to, you know, using them as just straight up like liquidity zones. And this is what I mentioned right here, my indicator. It marks out London high, Asia high, GS gaps, 1 hour, 4 hour, all of this kind of stuff right here. It's all marked out by the indicator, so I don't really chart it all myself. So yeah, if you're interested, I have a link for that in the description. I keep getting comments about that. Now what I'm going to do is I'm actually going to break down today's entire session explaining candle by candle why the market moved the way it did according to draw on liquidity, and the way I would use it and how I did use it to absolutely print today. So let's go ahead and get started. First things first, we have Asia session dumping, London session dumping with a little bit of a pullback right here. Okay. Now remember, we want to trade continuation based strategies. So right here, the first thing, let's just go ahead and go to market open. We are going to be going right here. First thing I want to note, I did not see this until after, but we do have a GS gap sitting right here on the 1 minute time frame. Okay, right at market open, which is a very key time to want to trade. And we see that right there. And as you can see, like obviously the indicator marks it out. The sensitivity for my indicator settings are a little bit lower, so it also marks out this range itself. But right here, we can see right at market open, we manipulate that GS gap and immediately reject while creating an SMT. Okay, this doesn't even look too bad of a short right here with this inversion, because now let's think, where's our drawn liquidity? So let's zoom out a bit. I'm going to go to, I think we have a weekly fair value gap as well. Okay, which will also show up on other time frames. But yeah, right here we have a weekly fair value gap below us. So we're going to go back. And now we have an objective. But just because we have an objective does not mean that we have to target that objective completely, which is important. If you watch to this point, you're about to get some real sauce, all right? We don't have to completely target this objective. We just now have an idea where, you know, the market is moving and drawing towards. So right there we have that, and now we have this GS gap above us. So one thing I like to see is, will the market fake out a move, resweep out the high, and where are we going to, you know, manipulate? We're usually going to go to that GS gap, which is why I made these GS gaps. So let's zoom in a bit, and as we can see right here, we have that gap, and we just go and bang, we tap into it, and now we get a bit of a, you know, pullback, reversal, and now we have the inversion. I took an inversion trade this morning, simply off of pre-firing inside of this gap right here with a stop at the high, targeting this low. Now you're going to ask, Gus, why did you target this low when you're drawing liquidities all the way down here? Great question. This is a part that gets very important. When I use draw on liquidity, I'm using it as a framework because everybody likes to talk about, oh, I'm going to use a daily bias. I'm bullish on the day. I'm bearish on the day. I don't really care about that. All I see is, okay, here's our overall objective. I'm going to take trades that follow the path of the objective. So our objective is going to be lower. I'm going to take trades towards that objective. Okay, it doesn't mean I have to fully target it. I could, but A very easy place to target is going to be unfilled fair value gaps, and also these candle bodies right here. This is low-hanging fruit. This is easy bread right here. So as you can see, bang, trade hit. You also could have just top ticked the GS gap. You could literally have taken it right there. But as you can see, we sell off. Now the objective is still the same. I ended up getting in short again, okay, on another set of accounts right here off of the closure under this. What am I doing? I'm just targeting lower areas just simply because I have my draw on liquidity lower. And for this, I can't remember exactly what I targeted. Let me go back and check. We have 5-minute time frame, and I think it was an untapped 15-minute was my overall, and I trailed out of this. There was an untapped 15-minute. So we can go right there. Look at this GS gap that bottom tick the other day. Anyways, right here, I'm just going to extend this to the right. It's small, so it's a little hard to pull, but as we can see, we're bringing it all the way over. This was the area I was targeting, and I ended up trailing out of this trade a little bit early, and I actually got out like really good fill, basically almost at the full extension, but I got out right there for a solid trade. And what am I doing? I'm still targeting areas that are close to my draw on liquidity. I'm just finding more draws on liquidity that are closer because, and I just got off a one-on-one student call. I told him the same thing. Whenever you have an overall objective, like this weekly gap below us, if you target zones that follow that direction that are closer, the probability boosts insane. So because we have this overall fat magnet on price, I'm just going to do this visually so you guys can understand. Huge magnet on price. Anything that's above, that's also a magnet on price, is low-hanging fruit, okay? Which we end up going higher from this point, okay? Or we go higher, we retrace, and then we finally hit that level. And then we get close to the magnet on price, which is that weekly level, but we don't end up hitting it. So we still have this magnet drawing price lower. But another thing I want to mention really quickly is when we go and we look at the 2-minute, we have a fair value gap right here. I don't use these a ton, but right here we have this wick. Okay, we draw that out. And we end up having a rejection block. Now, I know this looks like a lot. I should probably change the colors of these, but this is just, I'm kind of just like really breaking this down advanced. You don't need to know this much, but I'm really breaking it down. We have all this opportunity to go short, and then we have another opportunity with this bearish IFEG right here, closure below, stop loss at the high. Just keep targeting the 15-minute. We just get so much opportunity with magnets on price, but there's still people that are trying to fade and trying to take IFEG longs off this sweep of the low. That's not how it works, okay? So that is how you trade draws on liquidity. That's how you understand draw on liquidity. I know it might be a little bit overwhelming at first, but just to show you guys, like, this is my NQ chart. I trade on MNQ primarily, and if we just pull this up, you're going to see all of my annotations from earlier, okay? It looks a little simpler, but this is how this morning ended up looking for me, okay? So there you have it, okay? That is how you trade draw on liquidity. Remember, I have a completely free it's 10 hours, but it still says 9 on the site. It is 10-hour long free course going over all the concepts I use, my exact strategy, psychology, risk management, everything I do to make $30,000 per month in prop firm payouts, okay? It is all on there, so I'm begging you, just go there and learn. It is the most sauce that anybody's ever put out on the internet for free, I promise. So there you guys have it. If you have any questions, feel free to reach out. There's a free Discord attached to that free course as well. Without further ado, I'll see you guys in the next video. Peace.